Welcome back to Ready, Set, Sold. I am your host, Bryan Vogt. Happy Saturday. Hope you're having a great one. Maybe you're getting those Easter plans ready. It's coming up very soon, or maybe you're getting your house ready for the market. If not, you should be, if you're thinking about it. If you're just crossed your mind to make a move, this would be the time to start talking to an agent. And hopefully the agent's already talking to you. Hey, Joe graciously came back for the fourth segment because there's some great information, and Joe Harnist is who I'm talking about, who's president of Harnist Insurance Company, a company that's been around for almost 3/4 of a century, which is says a lot about not only the company but the president, Joe Harnist, who's got 40 years of experience. And Joe, we're going to be coming back to something that I think is really important, and that is especially, I would think, for buyers, what your credit score can affect how much your insurance is going to cost you, correct?
Yeah, Brad, absolutely. It can make a lot of difference. And the companies got into credit scoring, it's probably been 10, 15 years now. But they've gotten a lot more sophisticated with it, and it does have a huge impact on what your premiums are. Obviously, the better your credit score, the better premium you're going to get on not only your home, but on your automobile coverage as well. Every company has their own, makeup of how they determine the scores. It's not an industry standard score. So every company runs their own scoring model, and depending on where you fall in that range is where you're going to be as far as rates go. They start out with a baseline. All the companies start out with a baseline score, and they don't all use a number score. Some use a number letter score. Some use just numbers. Some use just letters. It's all over the board. But they all start at a baseline, and then if your score comes out above that baseline, your premiums are going to be better. And if it comes out below that baseline, your premiums are going to go higher. And it's basically based on the ability to maintain properties and maintain vehicles and keep things in good order and everything that all lead to less claims in the long run. So it's always good. Make sure your credit score is good. It doesn't hurt to check, periodically. If you know that your credit score has improved drastically, you might want to take another look at your insurance and see if that has improved, because the company that you're with doesn't necessarily always catch that, at renewal time. It may take another period before they catch up with it, but it doesn't hurt to look at all. And then the other thing is too, you've got your credits. Make sure that you're getting your auto home credit. We talked about this before. The credit on a homeowner's policy for having your auto with the same company as the home can be 25, 26%. You're also getting a credit off of your auto for having your home together with it. So you're getting credits off of both policies by keeping them with the same company. Alarm credits, if you have a burglar fire alarm, or if you have both, make sure you mention that. It has to be a monitored system and has to be approved by the company, but you can get a credit. It's not going to be enough to pay for the alarm system, but it's still, you're not buying the alarm system to save money. You're buying the alarm system to protect yourself and to protect your family. But there is some credit there that the insurance companies will give you for that. Early quoting, we've found that to be a big difference. Don't wait until the last minute and say, I want to get a rate on this, and you're like 1 or 2 days before your renewal. If you can be out 15, 20, 30 days in advance of your renewal date, and looking for insurance, there are what we call advanced quoting discounts that the companies give for getting that quote far enough in advance of when your renewal date is on your policy. So that's another little trick to keep in mind is quote it early. Don't wait till the last minute. Newer homes.
Well, that's good stuff. I mean, if I could just kind of jump in here real quick, and I think especially, I know you talked about the auto, but I think, it goes back onto that same thing. I think that's a really great tip that you just talked about, is that, again, typically closings are 30 days. Okay, so if you're a buyer, there's a timeline in the agreement, in the contract with the seller, that you have to get it done. And that's kind of built in, and most buyers are pretty good about that. Not all, but most buyers are pretty good about that. But what came to my mind, Joe, is the sellers. When you're, maybe this is the time to shop your insurance, or at least have a conversation with someone, just because of the fact is maybe it's 30 or 60 days out, whatever that is. But this is the time to start looking for another insurance company, especially if you're not happy with it. So again, getting ahead of the game is what I heard you say is really important, and it can save you some money. Hey, we're running out of time. I can't believe how fast the time went by. We've been talking with basically the guru of insurance, as far as I'm concerned, Joe Harnist of Harnist Insurance. Joe, what's the best way for people to reach out to you?
We've got a very easy phone number. It's area code 618 and then 233-5555. It's 233-5555. And then they can always go to our website, which is harnistinsurance.com, HARNIST, and then insurance spelled out, .com. And we actually have quoting forms out there for both home and auto that goes through all the questions and information that we need to prepare a quote for you. So if you're interested, you can go out there too. So
awesome, that's great stuff. And again, start there, but then talk to a true professional. So that's awesome stuff. We're out of time. We will be back in a few. You listen to Race That Sold. Talk soon. Bye.